Okay, Tuesday, December 27, 2016. I'm looking at earnings for next week. Okay. Remember next week, Monday, the 2nd of January, the markets are closed. Okay. Now, what I did is there's about 40 of these charts for earnings the following week. And what I'm looking for, since the market is pointing at new highs, I'm looking for cracks in underlying issues. And this Constellation Brands STZ, okay, so this is a weekly chart. You can see it's been moving up, moving. Unbalanced volume, bodies were in it and they've come out of it. I view this pattern as a pause before heading lower. And the downside, of course, of a $150 stock is that the options are pricey. But what I'm doing is I'm pointing out the possibility of this one, that this move that it's been running for a long period of time is cracking. It's a distiller, it's wine, things of that nature. Remember, there's been talk of tariffs and protectionism, and I don't think we're going to have any isolationism because war is a good racket. But we may run into problems where if we put tariffs on items, other countries may do the same. And that's free trade is what you really want to have. If a foreign country can make socks and marbles and underwear cheaper there than here in America, we buy from them, and then they in turn buy things like movies and services and airplanes and autos and things of that nature from us. So what I'm looking at here is this Constellation Brands. Okay, it's traded higher. This is a weekly, and it cracked in the October, November, December period where the market went higher. Okay, at the grocery stores, I looked in a lot of those islands where they have the gift boxes of alcohol. They were stacked pretty high still, but I did notice that a lot of wine was moved. So these guys may have moved wine, but they didn't move as much booze. But we're seeing a breakdown here in the trend. Okay, so this is Constellation Brands STZ. Now, if you go back even further, I'm going to do one on retail, another video on retail, because I noticed that retail is having a tough go at it. If you go back to 2005, so this is the peak of the real estate cycle in the United States. The stock market carried on for another couple of years and then rolled over. Okay, but here you can see that Constellation Brands peaked in 05. Okay, basically traded sideways and then rolled over into. So in my eyes, this was a leader. Okay. Of the previous downtrend in equities. This is a logged chart, so you can see the move off of 09. This is something fierce, okay? And the overall indexes in general, it's the same type of deal. Like I mentioned before in previous videos, my biggest concern is that we're actually going to correct something not from 2008 and 9, but something going back to 1933. Okay, that's my biggest fear if we get into some sort of trade war. Trade is a big deal. I noticed that Baltic Dry Index came down, but it also has seasonal. Here once again is your Constellation Brands. It had a period here, 95, 96, where it cracked, okay, but it continued on into 2000. It actually traded higher into the time period where it rolled over. Now we've had a pretty good move, and we've had a pretty nasty quarterly bar here, okay. You can see the unbalanced volume that the bodies are in it. Go back to the monthly real quick here. Same type of deal. The first red bars on a monthly basis in a while. It doesn't mean that it has, but the deal is at best, it's going to trade sideways. But my first reaction is that it's working on a topping pattern here. We did look at a weekly. Let's take a look at a daily. Like I said, this is earnings coming up. So if this shoots up into, say, the mid 160 level, I would probably look at it to run into some resistance here. These bars on the side here, they are volume by price. So there's a lot of volume at this price range, okay? So that would be known as overhead supply. The people that got into here, it comes down. What's the first thing most people do is when they get, close to it or the tick, they try to break even, another human fallacy, breaking even after, having a losing position. You're going to run into resistance, which is also right up in here with R2 for January 2017. Okay, so I'm looking at this as if earnings come in however they want to slice it. All right, I think that there'll be an issue with overhead resistance. You can see volume down in this area too. You do have an inverted head and shoulders, but it's, to me, I don't lean that way because of it's too close off the top. I look for something like this after a long period of time. Going back to a weekly again real quick here. Like I said, to me, it looks like a pause. If they're running into issues with the dollar, things of that nature, I believe Constellation, I'm not sure what they have in their for their brands. They have some domestic, but I think they also have a bunch of foreign also. Same type, if you're selling, whiskeys and that in Europe, you have, the euro go from 112, 13 to 104. That's an issue there. You have to raise prices, which usually turns people off. Especially if they're switching over from distilled to wine. But it was just a seasonal thing. But I did notice that there was a lot of distilled spirits sitting there in the little fancy packaging, and they all had they were all pre-priced with little orange stickers too, which means that they could have mispriced these when they put the little stickers on there. But right now, the Constellation brands, I'm looking at this is a pause before heading lower. And we looked at it in the past, and it is a leader of the economy here. Going on to the earnings here, what I did is I just grabbed the earnings for the following week. I sorted them by the return for this year. Here you can see it is down around 11 and up to 30. And like I said, what I'm looking for is that the market's trading higher, but this one's going the other direction. So what I would look for is that if there's a bounce in here this week, okay, then I'd go and look at puts. The downside of this is when I looked at these puts, some of them are already priced in a 2-point move, which is on a $30 stock. We're talking 7%, 6-7%. A lot of you do go after options during earnings. I like to, since I look at options as throwing a $100 bill in a slot machine, and pulling the handle once. To me, it's mostly gambling. I'm a big fan of writing options. When I talk about, writing options out, once you had the hard push in a move, and you get a pause, write something out, write 35 calls. If you're sitting at 27, are you willing to get out at 35 in the next couple of months? Because you get that momentum in there and people begin to start buying puts. The greed kicks in. They go running after the cheaper calls or whatever, far out, thinking that they're going to get it. Sometimes they do, and sometimes they don't. We know that 97% options expire worthless or get offset. If you draw the line right across, half the calls are winner and half the puts are winner, and then just divide it into 4 segments. 2 of the segments are going to end up being 0. Okay, the best thing I like about the options market is it's a cheap, easy, mostly liquid way of gauging the sentiment of the marketplace. Just like when we ran into new highs, there was a flurry of activity of buying calls, and that was a warning sign to me because prior to the election, we saw a whole big flurry of put buying. and the market turned and ran the other direction. Going back, it can take up to a couple of months for that to digest. Things are quiet. It should be quiet this week, quiet next week. We had a few, areas here where we poked into new highs and couldn't hold it in the equity indexes. As I go through the currencies, the emerging markets and things, it reminds me of 1997, where we had long-term capital management run into problems with the Thai baht and they blew up. But during that period of 97, 98, 99, we did have a lot of, 10% plus pullbacks on the way to the NASDAQ doubling. I don't think we're not even close to that psychology. But like I said, my biggest concern here is that coming off the 09 low and that we've done a lot of financial shenanigans, drop interest rates to, bare minimum. Then the underlying companies issue debt and buy back the stock, because a lot of these CEOs and that their pay is tied to the stock price. So of course, when we run into a recession and companies blow up, that president comes out, a new president comes in, the stocks drop from 100 to 5, and they say, hey, pay me on stock price. And of course, you work the financial strings, and all of a sudden there's a shortage of stock. You have all these buybacks, and you create a shortage of stock, and so price tends to go higher. So now all of a sudden the Federal Reserve, pulls out the cheap money. They're tightening. Companies have to do all the buybacks and stuff on their own. We're getting a new POTUS regime change, and I look at it this way, okay? Typically when we get Republicans in, that's at the ending of moves, because what happens is they kowtow towards, there's gambit type of talk about, well, we're going to drop taxes on the stock market. So naturally the layman, they go, hey, they're dropping taxes in the stock market, it's time to get in. Where those who have been in there for a while say, hey, now is a good time to get out, but I need to find able-bodied, buyers. And that happens a lot. If you're at full employment, people, hey, I'm going to vote for you because we have lower taxes, income, and that kind of thing. Yes, it does help the economy, but it's usually at the tail end of things. I'm not saying that, here nor there, but that's typically of what happens when you get, it's just how it goes. My idea, though, was that we would have more Democrats come through because they typically are for medical and healthcare and stuff, and lean that way. And so since we have the baby boomers, they would opt a little more to vote for Democrats to help with Medicare and Medicaid and things of that nature. But this time around, we had our own little Brexit. We're going to see how this plays out over the next 4 years. How I look at the market where it's at, I'm looking at it, we're kind of working at the end game here. We'll say like the 7th inning type of deal. The market's been moving up since 09. We have the baby boomers who are going to start coming out of the economy. Like I said before, 10,000 people a day go on Social Security, and we're only creating 3,000 jobs. So we're gonna have some issues here. Plus, also the wealth that the baby boomers have accumulated from their parents and their grandparents, and so on and so forth, is going to be passed on, and those are it's lots and lots of dollars out there. So that's what I think going forward is we're gonna end up with interest rates a lot higher than what people think going forward here over the next till 2040, 2042 for that real estate cycle. All right, so here's what Schnitzer Steel. Okay, so the same thing again here is the market's moving higher. This one's basically been slanting down. You know, this is 2014, 2015, and it's finally getting some movement here. Okay. And what I'm looking for is the opportunity of going against the grain on here. This one, I'm not too, it doesn't stand out as much as Constellation. Was it Constellation Brands? Yeah, I think that's what it was. Stars, I think, is what the symbol was, STZ. So I run through here. This one's basically sideways. The bodies are in here. So to me, I'm looking for a short, and it's a $2 stock. So I'm not interested in there. This one here, the TMQ, typically, you know, you look at this as a strong hammer, a bounce off the hammer, and you have the sideways movement here before it trends higher, but you're looking at a 50-cent stock, so I'll pass on that one too. Here's UNF. Okay, this one's interesting here as it runs up to 135, falls to 116, shoots higher. Okay, it is industrial business support services. So it moves along post-election, okay, and the bodies move in there with the unbalanced volume. So what I would look for here would be to go against the grain on here. Well, like everything else, $145 stock, the puts aren't cheap. That's how I treat options. I'm looking for, it's kind of like, what was it last week? What's Cintas ST or what was it? Yes, the uniform cleaner Cintas, I think it was SCTAS Cintas, and then there were a couple others that had the same type pattern, where it traded into earnings and then rolled over. Okay, so it's basically the same thing here too. Is all of a sudden you can watch to see if there's a flurry of activity in call buying. Things are kind of quiet here. I'm looking, I'm looking at interest rates in the dollar here because they're basically the main driver of everything underneath here. But if like I said, if retail is having a problem here, retail is 70% of the economy. And if we're having, it may be one where they're selling retail straight into seasonal high, but a lot of it's kind of breaking off. We did have a bounce in Amazon today, but from the high to the recent low some weeks back, that was 15% off, and not too much talk about Amazon dropping 15% and nobody noticing. I'm seeing a lot of these little triangles here, okay, different forms, pennants, that usually they're continuation patterns, okay. This one, ANGO, is healthcare and medical. I'm seeing issues. There are some bounces in medical and biotech and stuff, but they look to be having a tough time. I think what's happening is because the market's been going up for so long, that they're cheap is having difficulty. You're at a stage where all this money is run into banks. Some of the indexes are back at the levels that they were at in 2007, but we are coming off of the ZERP and NERP kind of thing. So we're coming off of historic lows. The problem is that what happens is since it's not a broad-based rally that we have going on here, all the money just flies in a couple of sectors. Okay, like they all running into banks. Okay, so what it is you don't have anything afterwards. The old buy the rumor, sell the news. And we're going into the new year. We've had the run in interest rates in the dollar. So I'm going to assume that there's going to be a lot of excuses going into earnings in the first quarter. We're also, we're going to have issues with politics until we become numb to it. I pointed out that my writing on Thursday that Sir John Templeton said that a bull market lasts about half the time a bear market lasts half the time of a bull market. Most of the bear markets I see are about 18 months. But if this is true, this is one of the longer ones, just like we had under Clinton. We had an 8-year run pretty much. And it really took off with the internet and China entering the World Trade Organization. But if we do run into tit for tat tariffs and all this other stuff it will cause issues. It'll definitely cause issues short run because of all of a sudden things that we rely on are imported chocolates, coconuts, things of that nature. They'll have to be consumed domestically in those markets, and it's an awful thing. I watched Woodrow Wilson, a program on him, and there was part of the time he wanted free trade, and the other part he wanted protectionism, and it didn't. The stock market fell in half twice on him. So it's like I said, everybody has contracts. Everybody, looks 3 to 5 years forward when they do business. And if you break the contracts, it filters through and rumbles and reverberates and all the fun superlatives. It changes thinking. You have to change your thinking on this one here. Like on this one, the bodies are in here with the unbalanced volume. It's pausing. These are multiple years. I've been seeing a lot of this going on where it just seems like there's the last rump in a lot of these stocks. And then remember, I think this is like the first week of the year for earnings. So this will be, telltale signs of how things are working out as of just like last week with things like Nike and that. Here's another one here. Here's technology semiconductors. Yeah, it's a $2 stock, but the same type of nowhere the semiconductor index is flying. It's kind of like the late 90s again too. But you're not getting anything. So there's a lot of this out there. Here you have one, business services. A few of those came out with earnings last week too. The same type of deal here, bang, 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 bang. Maybe it'll have, there's still room to run on the unbalanced volume on here, but a lot of pause up in this area prior. This one's cyclicals. Here, same thing. All 2014, 2015, 2016, it gets a bounce, and it, I see a lot of this, though the unbalanced volume is down here. So you could have one of these deals where things are quiet, and you have a $3 stock. You basically, it's only 27,000 in volume, but you just, you play games with it. You just start hitting the button, and the thing takes off. So you can end up with games like that too. And this one could be susceptible to one low type deal. It's been basically nowheresville. A lot different games are played, kind of like the whole dries thing. RPM, this one's chemicals. Here's a $50 stock. This one had a pretty deep pullback on here. And it got the bounce, but the same type of deal again, where all of a sudden, here's the breakout. The pullback is quite deep, and then now you're double topping on it here. Somewhat unbalanced volume is up there, but you don't see the huge spikiness of it where you can see them all running into it. They run into it and it rolls over. They run into it and it drops from 51 to 46. Here, the same type of deal, 55 to 46. But there's a lot of issues out there that I see that, here's one here where it actually is holding a breakout of this year. You can kind of lean on the long side of this with this electrical components. Okay, so I'm seeing that in computer hardware and things of that nature too. But you have all of this, here you're sitting at highs and this one's just bouncing off of, basically what a 2-year bear market, from 20 to 13, and now we're back up to 19. Alrighty, FC. Okay, Franklin Covey. Same type of deal. You have your little triangle thing going on here, pennant flag, however you want to look at this. Bodies are in here. It's only a $20 stock, though. I think the option's like between $1 and $2 if you want to go against it. jabbed through, then came back on here. Wow, 16,000 today. Wow. Quiet. Here's one here, industrial commercial vehicles. We've had the run up in a lot of these and this sector, okay. You can see the money moving into this. So this would be one I'd probably go against if we could get a day or two more on the upside. What do we have tomorrow? Wednesday? But things are thin all around. But you can see how the bodies have moved into this. So one would assume that the puts would be cheap on this one here. So the GBX would be one I'd look at to go against it here. Just for the earnings thing, That's how I look at it. Yum, same thing. Tucked with the wings. All of a sudden, things are. If restaurants are having problem and retail's having problem, that means the consumer's having problems. I talked about that too, that, half the country may be holding on to the money, trying to figure out to see, the belief of what's, going forward here. I mentioned before that, when Nixon was elected, he stuck by the first time and stocks fell by a third. And then he won by a landslide in 72 and rewarded those with the stock market falling. The Dow went from 1,000, I think, when he came in, and it dropped to 500, so it lost half. There were some other things that went on too, gold standard, Vietnam. Capture the flag politics with Watergate, things of that nature, so, for me, I try to play as neutral as possible on this, but you have to watch you can't really change the stripes on a zebra, and that's how I look at it going forward here. Where we're at in the market cycle and macroeconomics and blah blah. Who would be the best person to go in here and be a leader. So that's how I kind of look at things. But here you have the same type of deal where Yum Brands, it's been moving for a while here since the beginning of the year, and it's kind of stalling out here. Same type of deal here. Here's another one. Multiple years of sideways, right? We know of when markets go sideways, they break out. Here was 1 in 15 where it went sideways, came down, gave it a jab, and then reversed hard. So, same type of deal could play out here. It had a good reversal off of here, and then it's having a tough go at it. 5,300. Wow. Quiet day today. Here's another one. Kind of a deep pullback here, same sideways type action. The bodies were in here before when it went from 67 to 52 or 51. A lot of green bars. That's usually a good sign. But like everything else, they're waiting on, if they cut the cap gains, if they push that through, everything takes a while too. It's not like they snap the fingers and everything's retroactive. But that would also, so then what would you have, right? If you drop the cap gains taxes, how do you take advantage of the cap gains tax drop? You sell. Where most laymen are like, hey, the taxes are dropped, let's get into the market, right? But to take advantage of the tax situation, you have to sell. And we're a bunch of years into this. Same thing. No love there. Here's one. All right. Business support services again. Lots of bodies in there. $20 stock. Does have, has the breakout type of deal and a pause. But this is what I'm looking for is, buy puts against it. Unbalanced volumes up there. I'm not saying that's not going to continue on, but this is what I'm looking for. I'm looking for, if everybody's buying calls, who's buying puts, that's usually how it goes. Everybody who's in is in. They're all looking over the same side of the boat. This one looks to be making a bear flag here. Metals and or materials, containers, and packaging. LNDC. Poked its head through for a breakout, strong reversal, and trying to chug along here, whopping 62,000 in volume. Not much interest as of right now. Same type of deal. I mean, I'm seeing so many of these that are just pointed in the, been trading lower for a while. University Holdings. Trades, we're seeing a bunch of, vocational colleges. At full employment, they usually do poorly. When we go into recessions, that's when trade schools and stuff take off again. A little bit of buying there, but not much. Whopping 10,000. Wow, what an awful day, huh? To have to go to work and sit in front of the monitor. Here's a breakout, Speedway. Breakout and a pullback. This has to hold. Remember, if it fails to hold the breakout, it usually blasts through the other way. So it would drop from 38 to go through 30, and just a large amount of sideways here. And the bodies are in it too. Monsanto, same type of deal. You have a run into new highs, and this one's having issues. It's had a long run too. This was back to our Constellation brands, right? Yes, that's easy. This one just beautiful. This is a beautiful pause before heading lower. A bunch of sideways. What's this one? Broadlines, retailers. Okay, so this one's having difficult. Price Smart. Wow. Bodies came out of it here. There's a peak there. Not much action on here. Yeah, I think that's what our retailers are having issues, I think, are going forward. I wonder if that's bad data. I have to check on that one. I think I posted that one. The man taketh away. If you're going to cut the budget, something's going to have to give, and even though there are mandates and stuff that you keep track of Medicare and Medicaid, but things can change. Like instead of seeing 11 patients a day at the VA, you see 8. That kind of thing. Yep. All right. So a lot of bodies in this area here. This one does with this type of deal. This is supposed to be your support area. You have a lot of sideways. I just think this thing's going to roll over. And gold mining. Bodies are still holding in on this thing here. Here is a industrial building materials. Same type of deal. It's been trading lower. I mean, you're sitting here at, all-time highs, and your portfolio, they're all pointed in the wrong direction. Helen of Troy. This one here poked below the sideways, so it should spring. If it fails to take out the 90 here, I think it's going to roll over. The bodies are still hoping on this one here. But it says durable household products, but they also made like shampoos and things of that nature at one time. But here you have it, where you're working on a rounded top here. And I spent a lot of time just not getting through here. And you can see the overhead supply here and an area here. I'd go against this one here. Helen of Troy, HELE. Sonic, cyclicals, restaurants, same type of thing. You get a high, low, high, couldn't hold it, made a lower low, get about halfway back. It's one of these same type, how are these things? Lots of volume in this area. It's going to be overhead resistance. So also weather related too. Sonic is one of those, I think, right? You don't go into the place. They have car hops. or you get it yourself. Here's one. This one's just ugly looking. Electronic equipment again. RT, Ruby Tuesdays. That one already filed for bankruptcy. I went in there a couple of years back. What was it? It was 2 waters, 2 iced teas, 4 entrees, and add 2 salads. And it came to 108, and that was lunch. I knew I was in trouble. When the square plate came out, I said, hold on a second. This is Ruby Tuesdays? Yeah. So this is having, yeah, we're looking to be kind of long in the tooth here in the old bull market. Restaurants are falling apart. After retail, restaurants are a tough one here. The whole bankruptcy thing. Retailing first and then restaurants. But like I said, we're due here. It's pretty long in the tooth. We're raising interest rates. We're taking away the free money. Your creative financing days are over. Here's fuel cell. Here's another one they can monkey with. I don't know what's left of it, but it's down here as a $2 stock. Your ADX is pointed up here. But this is a pretty precipitous decline here. The same thing. You can always run the shorts on this here. And what's a high and low is a nickel. That won't take much to have the algos kick in, huh? High and low is a nickel. So I guess that's it for now. And of course, the earnings will pick up into January, but I'll go through these ahead of time. Basically, the only one I really found was that Constellation Brands that was pretty well clean. But then once again, think about it this way. If you keep going after, it's kind of like a parlay, if you have to hit a couple of the options. It's kind of like this where if you put in same type of deal, let's say $100 on 2 of them, you have to get one right at 100% just to break even, right? So but yeah, this Constellation Brands here, to me this is a pause before it heads lower. All right, there you have it. And I'll go through retail next.